US crude prices are down this week as Hurricane Beryl does less damage than anticipated. Hello and welcome back to our channel. My name is Daniela. In today's video, we're going to be looking at oil. But before we get into it, please like this video, comment, subscribe. And if you have any questions or suggestions, feel free to leave them in the comment section down below. So they were saying oil prices have been trading lower this week as Hurricane Beryl has done less damage than anticipated. We saw that the oil producing hubs in Texas actually suffered less storm damage than anticipated, as reported by Reuters. And even though we did see the refining capacity reduced throughout the week, the damage suffered to these refineries along the Gulf Coast, as I said, was lower than expected. And that, of course, weighed on oil prices because the disruption to supply hasn't been as big as anticipated. We did see oil prices rising in the days prior in last week, as the markets were getting ready for that hurricane to hit the United States. But we saw that once the hurricane hit landfill in the US, it actually got downgraded to a tropical storm, therefore doing, as I said, less damage than anticipated. And that has weighed on oil prices. We did see major oil ports, shipping ports, actually reopening on Tuesday, ramping up their output. And that, of course, counterweighed on some of those rises that we saw in US crude prices last week. We've also seen the weekly crude oil inventories actually coming in lower than expected on Tuesday. API reporting a drawdown of around 1.9 million barrels last week versus the 250,000 expected. So more drawdown in those crude oil inventories, and that adds on from the previous week drawdown of around 9 million. Now, of course, some of these disruptions to the refineries have had an impact on the stockpiles, and therefore this data may relate to that. But we have seen that the momentum in markets was definitely bearish, and we didn't see this bigger than expected drawdown manage to counteract that on Tuesday as the data came out. Most of the focus now on undoing some of that strength in oil prices in the previous week as markets were anticipating the impact and disruption to supply from Hurricane Beryl. Other than that, we saw some comments from Federal Reserve Chairman Jerome Powell on Tuesday, actually talking about how the US economy had started to show signs of cooling, specifically the labor market. And of course, that may have added a layer of uncertainty as may have reduced some of those expected demand for US crude in the future, weighing on oil prices as well. Nonetheless, we have the US CPI data for June released on Thursday. Markets likely to be watching out for that and how that may impact the Federal Reserve decision at the end of this month. Looking at the chart of US crude, we can see this pullback here in prices as some of those major news outlets reporting less damage done to those oil refineries in Texas. Of course, undoing some of the gains that we saw in the previous week as markets were anticipating these disruptions to affect the supply of oil. This has meant that the price is back within its key range of importance, a key support resistance area between 80.65 and 82.54, which has been of increased importance in the last few months, in the last year or so. Back here in May, also in March, we saw it converging to this area as well back in 2023. And this just means that we've seen oil prices converge to this area in the past. It's an area where we often see support arise when we've got a bearish trend and also resistance arise when we've got a bullish trend. Right now, it looks like it's been holding the losses for the last session. Here on Wednesday, we can see the momentum recovering from the lows, actually hovering just unchanged from the open right now as we're filming this. And of course, this area providing once again support. The moving averages are down below as well, below this area, which may increase that area of support. But we'll need to monitor how prices evolve over the coming days, of course, with that US CPI data as well. In the meantime, this area likely to offer continued support. That is it for today's analysis on oil. Thank you so much for watching, and don't forget to subscribe to our channel.